Thank you for joining iMeet. When you hear the tone, you will be the 19th person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. And we're going to talk a little bit about the roller coaster ride we've all been on here the last week and a half. Try to figure out what the market wants to do next. And after that, we'll look at some different indexes, some sectors. If this is your first time here, we generally try to talk about 20 or 25 minutes, and then we open it up to questions that you may have about individual stocks or targets or anything that's bothering you about the market. After that, that usually takes about 10 or 15 minutes, so we'll try to keep it fairly short. Well, it's been a wild ride since our last talk. We got our 10% correction that we thought we might get. The S&P 500 bounced off its 200-day moving average on Friday in what looked like could be a selling climax. If you read the Friday market letter we talked a little bit about. From that point, the Dow Jones has rallied back about 1,400 points. We're going to talk today a little bit about the correction, how you may want to readjust some of the holdings you have. Also talk a little bit about the change in leadership that I'm noticing that I think is kind of important. So a lot going on, so let's just jump right in and we'll get to any questions you have a little bit later. All right, here's the Dow Jones. You can see over here a lot of stuff on here. I'll try to make this easier to see. We didn't get down to the 200-day moving average on the Dow as it has been for almost all year. It was outperforming the broader market. You can see right now we're kind of battling around this, trying to hold above this 100-day moving average, which is good for the market. Generally, what I think will probably happen is we'll go up here, test the 50-day, which is also coincides with a 50% retracement of this move from the high down to the low. If we get back to that, that's normally kind of a place where you'll find resistance. So that's also one of the support levels on the pivot points too. So that's probably an area that's right around 25, 115 that will probably struggle around a little bit. Now, on a 10% correction, normally you don't just have a V correction like we had over the last couple of years. I expect this to, in the face of some rising rates, and we're going to have to kind of see what kind of economic data comes in, how fast this is going to get back. It's not like, we're not going to get the Federal Reserve coming out here and saying, hey, we're done raising rates until October. If that was the case, this thing would spike right back up and we go up to new highs. So don't expect this thing just to jump back to the old highs. We will do some back and forth filling, maybe even get a retest of the lows on the S&P 500. But it's going to be a process that will probably end up bullish for us. All right, so we have that was down for a second week. We lost about 1,095 points last week, or about 4.1%. The CTI was a +5. We go to a +2 this week, and we actually go bearish in 2 weeks. Now maybe the cycle is not going to be that long. We'll see. Just because we go to a negative CTI, that may mean we're neutral on the market. It all depends on what the other indicators and momentum and all seem to do. We did get a rise in the sentiment up to a neutral +2. That's been negative for quite a while. We definitely got rid of some of the bullish exuberance that we've seen over the last several months, especially after that parabolic move over here in the Dow. We've pretty much wiped all that out, and we're back basically to where we were at the beginning of the year. As of right now, the NASDAQ is the only index that's still up year to date, but that's fine for right now. The other ones are just a little bit under being flat. All right, we're trading above the 100-day moving average. We talked about a little bit. That will represent a support level. One thing that I will point out, during these swings, there will be some traders who will, if we come down into the 100-day and trade a little bit below it, we'll short the market so you could get a little bit more of a pickup in volatility. If it bounces off that, we could get jump up to around the 50-day. So there'll be a lot going on, but just look for this thing to go back and forth and maybe buy some stuff on weakness. Let's see. Okay, that's about on that. Let's go to the NYSE advanced decline line. You can see a pretty big jump. Gave up around 7,000 or 8,000 units over just the last 2 weeks. We're trying to put a little bottom in over here, holding this line of support. Basically, we're about flat today, a little bit more declining. So, we still got some work to do on this. It didn't completely fall out of bed, which is good, but it's weak. Here we have the NYSE new highs and new lows. You can see this big spike when the market had this couple of days where we had like 1,000 stocks making new lows. We're getting a big contraction right now with these swings. Not much making new highs. That's to be expected. You're about 2,000 or 3,000 points off the high. So there are some making it, but not much. And in fact, some of those new highs may be inverse funds. I haven't really checked. All right, here's the S&P 500. This is kind of the star of the show here. This is the one on Friday that came down and bounced off its 200-day moving average. As soon as it did that, traders moved in off the sidelines, had a big rally, 1,200 point intraday move on the Dow. This thing came back up here. We actually cleared the 100-day moving average on the S&P 500 yesterday. Kind of hanging in there right now. 100-day moving average is 2642. We're at 2649 right now, off about a quarter of a percentage point. So we'll see this thing to see if it battles or not. We'll probably get some swings down here to this 2600 area. We may get some swings up here to the 2710 area, which is what we looked at before as our downside target. And this over here, we can break above that. You're looking that's our 50% retracement of this whole move down. So that's where the battle will be taking place, between 2,700 and 2,710. I don't expect to see it just slice through that. Well, again, on a 10% correction, you're going to have you kind of have to. You had so much selling going on that you have to eat up all those extra shares. That's why I don't expect to see a V shape in here. All right, here's the NASDAQ outperforming today a little bit more. We came down here, didn't quite make it to the 200-day moving average. You can see we did break on some of these, the 14-day RSI. Remember, I always tell you want to keep that thing above 40. We did break through it just a little bit. Even the CCI is just starting to come back up to 100 now, which is, we can get through there. That'll be bullish. But we want to see this RSI, see if we can get back up around 70 or so by the time it gets up around the 50. Now, we have that long-term trend line in the NASDAQ, which also right now coincides with the 50-day moving average, and that's very close to the 50% retracement again on that index. So a lot of resistance right there around that 70, 70, 60, something like that. And that's, when you have a convergence of lines like that, you have a trend line, a 50-day moving average, and a 50% retracement. That makes for formidable resistance or support. So that's going to give us a little bit of trouble. I think if you're just a crazy trader, maybe you may sell some stuff at that point and wait to buy some more things back down here. As we go back and forth filling with some of the things leadership changes that we're going to talk about a little bit later, you may want to buy like half positions and then buy again on this. But I think you'll be able to probably do some trades where you swing off and where we run into resistance and bounce off that a couple of times, where you can take some short-term trades on that. Okay, here's the NASDAQ AD line. Again, we lost about 9,000 units over the last couple of weeks. Trying to find a little bit of a bottom here. We're about losing about 200 units today, so not bad. About neutral today. The new highs, new lows. Again, we're having that contraction in there. Today we only have about 20 new highs and about 40 new lows. So that's signs that you're trying to put in a bottom. You're not putting in a bottom over in here when we're hitting 250 new lows, that type of thing. Right, here's the Russell 2000. We did break below the 200-day moving average, but we jumped up above that actually closed above it the day that it broke below, which is a bullish sign. We're trying to put it in a bottom. Again, we did come down to the 30 area on the 14-day RSI, right around to the 20 level. You'd like to see this thing stop at 50, but we didn't get that. And again, we'll come up here, we'll follow this trend line. That trend line comes in up around 1560, I believe. The 50-day is at around 1547. So we'll kind of watch that in here. That'll be the resistance on that. If we get a trade up to that area, above 1540, that area, something like that, you might take some short-term profits and see how the market goes. But we'll have some more backing and filling on this. We still like to see the Russell 2000 start to at least perform with the broader market. It's still down 3% year to date, whereas the S&P 500 and the Dow are only off about 0.75%, and the Nasdaq is still positive. The Dow Jones transports are also off about 3%, so we'll keep an eye on that. Here's the transports. We had this long channel that was upward channel that was going good. It got overshot that on the upside. Okay, now we have a pullback down to the 200-day, bounced off of that. That actually bounced back. That was Friday also. And now we're up here battling around this 100-day moving average. Transports are actually up today. I think there's some, you're seeing some good signs in the railroads, also the airlines. I think maybe some oversold areas that we may want to look at. Again, this next resistance up here is around 10.6. We're at 10.3 right now. So I think you have a little bit upside on here on some of the transports. You can nibble away on those. Especially if you get down here, I don't think you'll come down and test this 200-day again. But if you get down around the 10,000 level on a bad day, I think you can pick up some of the transportation stocks. Okay, here's the semiconductors. Again, they had the big sell-off. Here's that trend line going up from there. We're below that right now. Sitting again right on the 100-day moving average, which was 1271. We're at 1270 right as we speak. So it's just sitting on that. The 50 and 100 aren't too far away. So you could see this thing, it would be a bullish sign if you see the semiconductor go above the 50-day moving average. So the jump up to that thing around 1290 would be bullish for the broader market because you want to see technology, also leading the way back on this thing. So there we go. Okay, I want to show one more. We've talked a lot about crude oil over the last, especially since August, where we thought we were going to get a trade in the oil stocks. We had our upside target up to about 62, which we got over in here. I said when we break 62, our next target was going to be 70, which would have been up around here, which would have been a 50% retracement from that from the last all-time highs down to the lows that we made back in September, or back last. I think it was in the summer, so when we had the big drop. But anyway, we got that thing. We broke the 62. I mentioned it in the daily market comment, and then the 60 would have to hold. Otherwise, we should probably take some profits in the oil-related areas. We didn't hold $60 right now. We're trading still around 59 and around 59.07. Oil equipment services are off 1.36% today. 1.5% on some of the other oil things. So this is a little bit of weakness on here. Once we get, the problem with we're back with the oversupply things. Part of that is because over $60, especially over at 62, the U.S. drillers come back on pretty strong, and you're also you're not getting Iran and some of these other poorer countries that still want to get their oil out there because they've had sanctions on them. If they can get anything out, they're going to continue to pump until they get more sanctions on them. So I'm at this point, I think you probably should have taken your profits up here around this between 60 and 62 on the oil stocks. And if we get down here and maybe test this, we're going to test the 100-day around 57. We're 59 now. See if it holds that. We may even get down to, if that breaks, we'll get down to the low 50s, which would give you an opportune time. There's always a lot of oil bulls out there. And I think that, the battle here is oversupply concerns, but then you have the other side where the bulls all say, hey, but if you're having expanding economies, you got to have oil, and that's going to keep driving the price up. So that's the go-between on that. But I think right now we had our move from the high 40s up to the 62, and I think I sold my oil stocks into that when it came back down to 62. I think that either self-covered calls if you want to hold on to them because of the yields, or buy some puts or something just to protect yourself to the downside. All right. What are we going to do now? If we're going to actually go back to to our old highs, do you want to just go into the same stocks we bought all last year, or are we going to we're going to see some new leadership? One of the things I want you to do and get used to this. Well, we talk a lot about industry groups and what you want to be in the strongest sectors and the strongest industries and own the strongest stocks in there. Right. One of the things we can look at right now is what has changed in the first of the year, or what's going to drive the market going forward. That's going to be, in the news. We have infrastructure spending that just came out a week ago. They've been talking about that since December. We have an increase finally on the defense spending. That's something that's going to go on. The tax cuts are still part of what we're looking at. Okay, the thing that started this whole sell-off here was a pickup in wages that we talked about. We are also having a lot of spending by the consumer, and they're taking on some more debt, which is good for the financials, as long as the rates don't rise too fast. So all these themes are going to point us to what's going to, where the big money is going to go into as we start to bounce back or start to firm up here and work our way higher. Now, these slides may be a little bit hard to see. This is off of the new site. Maybe if you give us some feedback on that, we can maybe try to darken them in the future. But what I want to do when you go to the industry groups, first thing I always tell you to do, click on relative strength. We want to list these things by strongest to weakest. Okay, now the way it is right now with relative strength, this is also going to include the groups that have over the last 50 days that have been outperforming. Now, if you look in this thing, you're going to see aluminum, you'll see steel, you see diversified mining. A lot of these, part of the material stocks. You have footwear, which is part of consumer discretion. Toys, that's mainly due to one or two stocks. Then you come back down here, you have banks, central, broker-dealers, that type of thing, some of the internet stocks. So these are some of the things that you can look at. But if you do this relative strength and you go, what is the current condition of some of these industry groups, all of them should be deteriorating or weak if they're all being sold. But you have several that are they're still strong despite a 10% correction in the market. And that includes aluminum, footwear, toys, but that's due to only one or two stocks, so I'd hesitate on that. Marine transportation, again, not very many stocks in this industry. Then you have healthcare products, which we'll go over a little bit, because I have concerns on that. Then you also have the banks and Southern, and media publishing. Okay? Now, once you go over here and you click on some of the stronger ones, we click on aluminum, you'll see how it was outperforming the market, on the upside over here. But then you'll get a list of these stocks, which ones are strong. You come down here, you want to take a look at the ones that are long with a score of 0. I've printed off a couple of these that I think can be bought in here. Here's an aluminum stock. This is Century Aluminum. The symbol on it is CENX. You have a 10% in the market. This thing has come along here. This is called polarity, when old resistance becomes support, which it has now. And you have this thing coming up here around 24 and change. It's pulled back to 20, bounced off of this area. It didn't even get down to the 50-day. Momentum came down right here, came down to 50, and it's starting to head back up. You just got a little bit below the 50 on the 30-day stochastic. So, momentum still looks good. You're moving higher. You're up today on this thing. This would be a stock that the sector and the industry is still strong, and this seems to be one of the better performers. Okay, here's another one. I'm missing a stock in there. There was another one in there. It's called CSTM. It's called Constellium. It's another chart that looks very similar to this. So those might be a couple stocks that you look at to add for the infrastructure spending and material area. Okay, here's another one. We looked at footwear. It's still strong. A couple great-looking stocks in here that are strong. Skechers, SKX. Again, you look at some of these. Here we have Skechers. You had a 10% pull back in the market over here. Skechers is going sideways. You had some big swings in here, but the 14-day RSI only came down to 50, and you're back above that. You got down to the 50 on the 30-day stochastic, which could indicate a change of trend. You had a bounce off of that. So, again, you bounced off the 50-day in here a couple times, and you're starting to work your way higher. Skechers is one that can be bought. Here's another one in the footwear. VFC, Victor Frank Charlie. Again, you came down this little area of support around the 50-day, and you're heading back up on that right now. The 14-day RSI bounced off of 50. And again, you bounced off of 50 on the RSI. It didn't even get down to 50 on the 30-day stochastic. So this is another strong stock that it's in a strong sector, and it looks like it's going to outperform the market. Footwear, for some reason, I remember years ago, was always considered a kind of a bellwether as far as a strong economy for some reason. I'm not sure why, but it has in the past. So. Okay, we get another one. Now, this one I have some concerns about. This is healthcare products, which are showing up strong, and indeed some of these stocks have pulled back. Part of that is the Amazon crush, where they want to get into health products, which can hurt some of these. But there are a couple stocks that look good in here. I think, some of the hospitals look good. I mean, obviously. Amazon's not going to start opening up hospitals anywhere. But if you go in here, there's a couple stocks that look great to me in here. One of them that's gone in my portfolio, this is EVHC, Envision Healthcare Corp. 10% pullback in the market. This thing's been going up and then going sideways, and we're starting to move up again. The technicals look strong. They came down to support levels on that, and they look higher. Here's another one. I didn't put it up here. KND, not sure about that, but some of the hospital stocks could be looked at in here. But the ones that are strictly healthcare, what do you want to call them? Things that make products that are, for things that Amazon can get into, I would be hesitant to buy those until you see how the Amazon thing is going to work out, because that if they can offer the same products out cheaper, it's going to happen, and they'll do that. But some of these healthcare products or healthcare services and stuff like that Amazon can get into are acting pretty well in here. Cardinal Health is another one, CAH, that the chart really looks good on in here. Okay, after you look at the industry groups and you go by relative strength. Okay, another one thing that we want to do is go back in there and this time click on the 1 week percent change. What this is going to tell you, okay, we had a 10% pullback in this market, a couple thousand points in the Dow and that. All right, what is bouncing back the fastest? That means that includes some of the groups that are maybe have got oversold. They were strong before, and the big money wants to go back in them. Now, the stocks that stayed strong, one of the things you have to remember about that, when this market was correcting, the professional money managers didn't even want to sell those stocks. They thought, well, I'll just keep on to these. I'll hold on to these while I sell some of these more volatile industry groups and that. So in this case, you'll find, let's see here. The strongest bounce back thing in here is semiconductors related. Over the last week, probably since that sell-off, you're up 3.25%. You're down a little bit today, but you can go over here, click on semiconductors and related, and you'll get a list of stocks. Of course, you also have, let's say, steel. That was another one that showed up in the relative strength industry groups. Air freight courier, part of the transports, coal, some of the other things you can look at over here. Semiconductors, what looks great? Go in here, you'll get a list of the stocks. There's too many in here right now, but you can find a lot of semiconductor stocks that still are improving. One of our favorites, NVIDIA, came down here. You broke below the 50 briefly, and now we're heading back up. We're north of the pivot point. You didn't even get down to 40, so remember, as long as the 14-day RSI stays above 40, you're still in a bullish trend. You didn't even take out the old lows in here. As soon as we'll probably break out the new highs in NVIDIA, you didn't even get down to the 50 on the 30-day stochastic. So that's another one in here you might want to look at. You had steel stocks over here. They did have a big pullback, but if you go back to that thing, steel is one of the groups that they're bouncing back the quickest. Okay, again, that's infrastructure spending. You can look at some of the stocks like U.S. Steel in there. Let's see, let me go back on here. U.S. Steel, there's a couple other ones that look at Nucor. NUE looks pretty good to me. A couple of those that you may want to look at for the infrastructure spending. That's going to be an area of the market that's going to outperform as we start to get stronger again here, start to do the build out in here. Okay, another place you could go into the site that I think is important. When we talk about some of these industries and sectors, I always tell you, okay, now let's go over to the advanced tools and go to the point and figure, not only the breakouts, but more important, the point and figure early alert breakouts. and that's going to give you the stocks that are okay. They're heading up, they're long, and they're going to, you want to see if they're going to have a strong power rating and see if they're going to break out, if they're close to breaking out. Surprisingly on here, you go in here, you come down here, there's Cardinal Health that we just talked about, CAH. Here's another one. We talked about the defense spending picking up. Here's Raytheon. They make all the Tomahawk and missiles and all that. Okay, here's that footwear stock, VFC. These are stocks that are breaking out of double top formations. Not only have they bounced back and they're coming, we've already had the sellout, they're getting ready to break out to the new highs over there. We have some other ones in here. Martin Marietta, that's another big one for the infrastructure spending. They make all the materials. That's a stock that is getting ready to break out of a double top. We're long. It's got a nice power rating on that also. So this is some other ideas where you can confirm when you find out the sectors and the materials on the site, and then you want to go, okay, well, I see all these stocks here on the trend following models that the Second Opinion uses, but I also like to buy the breakouts too. And this way you can sort out those the stocks in those industries that are getting ready to break out. And they're not only are they held up well, but they're also challenging their old highs and old resistance areas. So just to kind of wrap it up again, what we talked about the last couple of weeks, what's making up this bull market? Tax cuts, deregulation, infrastructure spending, economic recovery globally, expanding earnings. We've wiped out so far this whole earnings thing, so we've got a free quarter shot of great earnings, and we can start focusing on second earnings right now, and we're back basically to where we were. We talked about reasonable valuations. We're trading right now around 16 times earnings. A month and a half ago, we were up around 19 and change. Okay, what can go wrong? The same thing. We get inflation spikes where all of a sudden the new Fed chief, which I don't think he wants to wreck the market or like that, but when the first time we started hearing about them saying, well, we're gonna raise in March and maybe April too, and see if it goes from there, that's going to be a red flag where we gotta lighten up and move a little bit of funds to the side for another pullback. Low unemployment causes wage inflation. We had one report. I think we got a big one tomorrow. I'm not sure this. I think it's the CPI. We want to make sure we don't see a big jump in that. That could cause a wobble in the market. The market isn't cheap. Well, we got rid of that one. I'll take that off for next week. Global central banks are going to be starting to raise rates. We want to see if they raise too fast. And of course, then you get the war, the volatility, higher yields. We've talked about all that for a while. So we're going to go ahead and get to your questions right now. I see a couple of them on there. I did have some that came in early. Someone asked about the stock CSRA. It's a defense stock. It actually was getting bought out by, I don't know, Lockheed Martin or something like that. It was up about 37% yesterday. I sell those as soon as they announce they're getting bought out. Some people will say, hey, they're going to offer 50. Somebody else might offer 55. Who cares? Because the problem with that, you're holding it for a couple of bucks. What if they take the offer off the table? They dig into the fund something and then they discover that whoops, we didn't see this before. They take it off the table. You're just giving back 25% doing stock. So I take that and take the money and run. But I think you're going to see some consolidation defense budget. We've talked before about that KTOS stock, which hasn't done much. However, I think after the earnings are coming out, you want to watch that stock. They make all these drones and all kind of stuff because the CEO of that stock is kind of over-promised and under-delivered in the past at earnings. So I don't think you're going to see much in that stock until this next earnings report to see how these new contracts that they've got are coming out. If he over-promised again, you might see a little bit of a pullback back to that $10 range, and it would be a good opportunity to buy on that. Another question that came in was is volume. What we consider volume on high volatile days. Yes, you do. What you're watching for is what makes you nervous is when you see volume go down, and volume when the market goes down, you see volume twice as much as it was on the way up. That's a red flag for you when you start to bounce. We had pretty good volume both of these days going back up. That's a plus. It wasn't quite what you have had going down again, but that's one of the reasons why I think that we won't have a V recovery, because you do need to eat up some of those shares that came back onto the market. The market makers have those; they'll put them out there for a while. And once they get eaten up, then we can work our way more. But the volume is important. Just like if you have a sell-off on low volume, and that represents a really good opportunity to buy. Okay, another question was, does consumer discretionary look good? Yes, it does. I like consumer discretionary because it goes against the grain. But you have people making wages start to go up, and we start to see more credit going on to consumers. That means they're spending money, and that's going to help that's just going to go into the consumer discretionary stocks. I would even look at some of these, like the Home Depot and Lowe's, for some reason, had a bit of a correction. They've gone from, Home Depot's gone from like 205 down to 180, so a nice buy opportunity in that thing. All right, let me get a couple of these. We got about 6 of these. Audio is bad over the phone. Uh-oh. Okay, should have got that quicker. ESRX, VIXY, MRO. And these oil stocks, I told you I'm going out with some of these things where I've sold my oil stocks, but not all oil stocks are created equal. You want to make sure that the ones that are just covered in debt, you want to get rid of those because they're going to be sold the quickest after that. How do you screen for defense stocks and small caps? I'll show you how to do that in a second. Okay, you said you don't think there will be a V formation. Do you think there will be a W formation or something else? It could be a W. I mean, I think that there's this 10% correction, and in the face of rising rates, you're full if you just think, okay, that's it. We bounced off of that. We're going to new highs again, because you can't ignore the fact that inflation may be coming up, stepping up in here, and and the wage inflation. You have to see what's going to happen. You have a couple more. Another FOMC meeting coming up here in March, where they, I think it's right now, it's about 75-80% chance we're going to raise rates, and you want to see what they're going to have to say about that. I think that could keep some downward pressure on the market until we get a clearer picture. The new guy doesn't want to be responsible for crashing the market his first month or two in office, so he's not going to be real aggressive. But you just want to see what kind of transparency he's going to have. Janet Yellen was very transparent in what she was going to do, and I think she always had the market chart on her desk when she was doing stuff. Question: thoughts about gold miners in this market? I'll tell you, 2 weeks ago I thought gold was going to break out because sometimes it's an inflation hedge, but you bounced back off of where resistance was on gold. You came back down. We'll look at gold over the next week or two. I'm not, I'm kind of neutral on gold right now. So we'll look at that. I wouldn't be a big buyer of gold jumping in right here. Thoughts about biotech, Perry? I like biotech in here a lot. In fact, in my sector and industry portfolio, I added biotechs this week. I also added media publishing, which is a PBI, I believe. But XBI I bought this week. I think your biotech's going to be one of the leaders going forward. So we're going to share the screen here and look at a couple of these charts real quick. If you hold with me, we're almost running out of time, but I'll go as fast as I can. If you have any more questions, just bring them in. Okay, we'll look at this ESRX. Okay, a nice bounce back here down to 100. We did break below that 40 on the RSI. We got hit to the 20. It's trying to put in a bottoming thing in here. You need to get up. Stocks like this, it's you had this big parabolic move. You covered. 84 down to 58 would be 24, 22, 6. It looks like you retraced about 50% of that move. Maybe not quite. I wouldn't jump all in on it. unless you're just thinking maybe you can get a trade up to about 75 or so, you're probably going to go back and forth with this. Express Scripts, again, one of the problems with this is I'd have to dig more into their business, but anything that Amazon gets their hooks in, it's going to cut in into the margins and all that kind of stuff. So that's my concern on that. Okay, MRO. Okay, bounce back below the 100. Marathon is one of the better, less debt oil companies down here around 16, 12. I'm not sure what the yield is on that thing. Let me see. Okay, it pays it's paying about 1.3, which is good. Some of these oil stocks that have a lot of debt and they're still paying. They're not even making enough money to cover their dividends. A little worrisome. But this thing, I think, if you're looking to buy, you have this big support down here around 14.5, 15. I would look to buy Marathon if you got down here around this area down here. If you want to own some of the oils, that $15 area would probably represent a real good buy on that. Okay, VIXY. This one is the we had a nice big jump on that. You're going to get some swings in here. I would if you're depending on which way you're going to go, and if you're looking for this thing to come back, intraday, I'll tell you, if you can get a move up to the I think I would probably play this off of the 50-day moving average. If we go north of the 50-day moving average on the Dow or the S&P, you want to be short the VIX. That means that means a lot of the traders are looking to come back down. We can get back down here around to this 20. I'd say this thing could probably come down at least to the 20s, mid 20s on this thing. If we get to the 50-day and we bounce off of it and we're back down here around, say on this thing, down here to the high 20s or so, then you could probably go long and look for a spike up in the VIX again. So you're going to have a lot of playing on that again. And don't buy those things to hold for a week or two because they swing almost too fast to catch. So I know somebody who actually got bought into the VIX and they had the right call. They still didn't make any money. So anyway, let's see here. I'm trying to get back to my screen. So we have any more questions? All right, no more questions. I'm going to go ahead and wrap it up. If you have any questions about what we just talked about, go ahead and send them to dblake@marketedge.com. Other than that, again, let's just don't be a hero. Don't try to jump in front of everything. I think you can get some short-term trades for your longer-term stuff. Go ahead and buy a half position, and if we get another pullback to retest the lows, you can load up to that. You want to make sure you're in the good, solid sectors that where the leadership is going to change. And other than that, I appreciate you all taking time to join me for this. I hope you got something out of it, and it's going to enable you to make some money. All right, have a good week.